Okay, hello and good morning, everyone. Welcome to the Easy Markets Daily Pitch International with me, Darius Anucauskas. Today is the 14th of March, guys, 2023. So, yeah, welcome to episode 5. Yep, guys, this is just a quick session. Well, we'll try to keep it quick, not to take too much of your time, basically, but we'll have a quick analysis of the market. We'll have the technical analysis mainly here. So, yeah, guys, I hope you're gonna enjoy it. Hope you're gonna watch it till the end. We're gonna jump into a few charts, but before that, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Look, I'll give you a few seconds to read the rest and we can continue. Okay, guys. So yeah, let's quickly mention our Easy Markets website, which you can check out for more information about us. And yeah, guys, let's jump into the charts. Now, the first one I want to pick up here is Nikkei 225. Now, of course, the whole kind of banking saga, banking issue continues. And of course, now there's a lot of rumor walking around like, hey, maybe we're kind of, having the same issue here like we had in 2007. So SVB equals Lehman Brothers. Look, I mean, you can draw a lot of comparisons, and in a way, there are similarities, there are some different things as well. Either way, the most important for us retail traders and investors, is to properly position ourselves and to be careful and to kind of manage our risk accordingly. Now, here, what we have now, Nikkei declined after hitting a key resistance level around here. Just bear with me one moment. So this one right here, the 28,733, it started declining. It moved lower. It cleared up this key barrier here, the 27,863. We managed to drop below it, and now we're currently finding some support around here near, let me just, where's that line? Where did it disappear? Okay, what's happening here? So where's that line? There we go. So the 26,950. So this is where we found support. Okay, great. Now what's next? In a way, of course, everybody's very negative, and in terms of our, let's say the MACD, for example, here is showing, bearish indication. But I would say be cautious a little bit. So, and what I mean by that is because, look, from the technical perspective, yes, this is looking a little bit more on the bearish side, especially if it clears up that 26,950 territory. This will confirm a forthcoming lower low, and yes, we could start looking and examining some of these lower levels. Now, the only thing is, let me just fatten up this little arrow. There we go. So, in a way, yes, it's all logical, it all makes sense, and there is a good potential for this one to move further south. But at the moment, I want to be cautious. Because why? Because let's say if this territory holds and we see a bit of a rebound here back up, what I want to see if this is going to happen or not is a potential head and shoulders pattern. So we have our left shoulder here, we have our head, and let's say if this rebounds back up here and trades somewhere around here, finds resistance again somewhere close to this 27,863, and then yes, another decline here could be possible. So basically, I am in the medium term, I'm considering something like this. Again, this is me probably jumping a little bit ahead of myself and trying to, you know, predict the future too much. But hey, we're here to examine all the possible scenarios, so we need to take that into account. So look, for now, long story short, I'm keeping an eye on this whole territory right here. Let me just probably put and just highlight it here for our future reference. So this territory right there, in a way, like I said, if it does act as a good area of support, we might see a little rebound here, and maybe a formation of a nice head and shoulders pattern. But if we start clearing this area straight away, look, don't get me wrong, I mean, we might scrap the whole head and shoulders idea, head and shoulders pattern scenario, but of course the kind of the last chance here, or should I say the last opportunity maybe to consider that scenario could be on if we do draw something like this. So look, I'll keep this for now on my chart just for the sake of it, just to see if it's actually going to work out or not. But let's say if we do drop straight away below that 26,950 territory, I'll aim lower, but I'll only aim for this downside line, which kind of in a way could be seen as a neckline, a potential neckline with a decline. So yeah, could be a case. But again, let's see what's going to happen here with this territory in a way with that 27,000 mark. Yeah, at the moment we're getting a bit of a rebound, a bit of support. So of course the big question, what's going to happen today with the CPIs, with the US CPIs, and how the market's going to react on that one. So if you're following everything, guys, you probably understand that yes, this is the kind of the last bit of data that's going to come out before the interest rate decision takes place next week from the Fed. So yeah, that's going to be an interesting one to watch. Now, in terms of all the interest rates, and now, of course, the recent events with the SVB kind of are, you know, raising the question, raising the question, will there actually be a huge interest rate hike? Like, for example, last week, on Tuesday, when Jerome Powell delivered the speech, he said that, hey, they're very hawkish, and maybe we could see even a 50 basis point increase during March meeting. But then it quickly started fading out. It seems like, yes, then the market just anticipated actually only a 25 when the whole SVB saga started. Yes, suddenly everything started dropping to the 25 basis point. And now what's interesting is that it kind of balanced out. So it basically now it seems like that the according to the FedWatch tool, of course, there's around like almost equal amount of towards a 25 basis point and nothing, so no interest rate hike. So yeah, that's going to be an interesting one to watch. Again, like I said, a lot will depend on the CPIs today. So for example, if the CPIs today continue, let's say the year-on-year one continues to slide. Currently, the expectation, if I'm not mistaken, is 6%. So previous one was 6.4. The expectation is for a 6.0. If it comes out even below that number, now that's where it's going to be very interesting, because then, in a way, the Fed might say, you know, hey, the inflation kind of seems to be dropping healthy, so and let's not, you know, complicate our lives even more right now at this point, and let's kind of, you know, not raise at this meeting anything. So but of course they will remain, you know, they will remain blah 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 monitoring, they will continue monitoring the situation and stuff like that. So again, it's a bit of a speculation here. One of the scenarios, this is one of the scenarios, or maybe they will say, hey, you know what, let's stick to our pace, 25 basis points. That's what the market has already kind of is already pricing in, and you know, we're and let's, whatever happens with other, you know, companies, let's take the hit, because in general, don't forget that the Fed kind of wants to see slightly higher unemployment, basically, because that's the kind of the main tool that they need to use, they're using in order to maintain inflation. So basically yours and mine's spending, and you know, we need to lower down yeah, the spending, and that's how they can control inflation. Now, will that be the case? Again, let's wait and see. For now, looking at the picture here, for example, on Nikkei, yes, everything's looking quite bearish, but I wouldn't, like I said, I wouldn't kind of rush into anything. Like I said, keep your eyes on the CPIs today. That's going to be an interesting one, and let's wait and see. Now, jumping into Dow, guys, very quickly. So Dow did decline yesterday, not much. Yeah, just only like 0.28%, 0.28%. So yeah, we did have that drop initially on the cash index, and yeah, we drifted lower. We dropped below my key support zone, and I think I'm going to reuse this. I'm going to reuse this highlighted zone right here, guys. Always reuse, always recycle. That's a hidden message for you there. So yeah, look, this is a key support zone, as you can see yourself. Now, previously it acted as a good area of resistance support, and now it's doing the same job again. So the 31,000, like kind of 885, between this 31,740. That's what I'm keeping an eye on. So in other words, if I want to go, lower, I need to see a drop again below this territory. Now, some of you probably are saying, hey, but what about this little hurdle there, the yesterday's low here on the cash index, the 31,532? If that kind of goes better for you guys, perfect. That's also not bad, because again, a nice drop below this hurdle will confirm a forthcoming will confirm a forthcoming lower low. And then we could start targeting, for example, the area somewhere around here, somewhere around these two levels, the 30,877, or in general, you could just aim for that psychological 31,000 mark. Now, again, good potential target. At the moment, I would say we're kind of playing the waiting game, so don't be surprised, for example, if nothing happens during the CPIs. But yeah, if the, let's say, CPIs come out higher than the forecast, and by any chance higher than the previous number, I mean, that could bring the market lower, and yeah, because the Fed will then say, hey, you know what, I don't care about any other banks, I care about the economy more, and that's why we need to continue increasing rates, which will be bad for the business. And of course, yes, we could see Dow, for example, and other indices dropping lower. Now, in terms of other indices, DAX, there we go, beautiful move yesterday. The psychological of 15,000 got tested. And look at this. Look at my levels here. So basically, look, first thing first. I talked about the technical picture here, and I said that, hey, if you want to go lower, then certainly wait for, if you want to go lower, then wait for a drop below that 50-day EMA, below that 15,200 zone as well, and then we could take it from there. Now, so far so good, I would say. It managed to drop nicely here. It fell below that hurdle. One of my targets got met, the 14,961. And now the question here is, what we're going to see next. Will we see just a straightforward decline, or will we actually see a bit of a rebound? Again, at this point, I would probably stick to something a little bit more cautious, like, for example, the same target, that 14,960. Yeah, if we do drop below this, I will aim for that 100-day EMA, or maybe even that 14,680. 14,681. Now, again, good potential target here. However, I think that before even this target could be reached, and to be honest, yes, although this level here, 14,681, sounds good and looks good, one thing that you have to consider here is this. Basically, oh, no, not this one. There we go, right here. So, the 23.6 on the Fibonacci. Now that is roughly, and I think let me just put some markings here. Just visibility. Where's that thing? Prices as well. There we go. Yeah. So there we go. 23.6. 14,800. That's what I'm going to be keeping a close eye on. Yes, if we do drop below that 14,961, my next target is the 14,800. That's the 23.6% retracement on the Fibonacci. Slightly below that, we do have the 100-day EMA, which could play out nicely. So yeah, let's wait and see. Again, don't be surprised, for example, if we do see a retracement back up here and we get something like this, for example. So this is my other scenario, which I'm also considering. Let's say if we do continue to trade above that 14,960 zone, I will consider maybe a bit of a retracement here back up towards that 15,150 territory, approximately around here. Yeah, if we continue to trade below it, something like this could happen. However, if we start pushing back above the 15,200 territory, now that's where I will get it might get a little bit interesting again, and for the buyers, and we could see a push back up. So an index, the dollar index. This one is just waiting for today's news as well, guys. So yeah, we're seeing just yesterday we saw that nice little doji forming, so that means that hey, we could expect some sort of a big move today potentially. But look, previously what I talked about, I said that hey, if we do drop below this 104.05 territory right here, and we drop below the 50-day EMA here and below all of our EMAs basically, then yes, I could consider a further move south. Now, so far, what I'm getting here is just kind of a gradual decline. Look at it this way: if we continue to trade below this territory, below that 104.05, I will still aim lower. If we start pushing back up, this is if we start oscillating around the EMAs, I'm going to take a neutral stand, because again, this is not something that I really like trading. However, if we start pushing, well, although ideally I would like to see this 105.87 getting broken, but I will already start looking at some higher levels if we do push above the 200-day EMA. Now, from the shorter term perspective, we could play it this way. Basically, if we do push above the 200-day EMA, we could consider something like that. But still, you have to keep in mind that basically these obstacles could come in the way, and we could see a hold up here. It could drive back down. So that's why this one I would say it's a little bit on the risky side. However, if you position yourself carefully, have your stop loss in place, guys, I mean, everything could be fine. However, just again, you have your judgment, do what you're comfortable with, because again, what's comfortable for me may be not comfortable for you guys, so you just kind of need to all the time, and unfortunately have to kind of balance, and because maybe I'm wrong, maybe it's not gonna travel anywhere, it's just gonna hit the 200 EMA here, give us a false breakout, and reverse back down. So I've seen that happening several times, but hey, that's the market we're dealing with. It never gives us what we what we wanted. Well, most of the time. But anyway, look, like I said, if we do push back above all of the EMAs here on my daily chart, then there is a bigger chance that more buyers could join in, and we could see maybe a push back up here. But at this point in time, look, I'm still cautiously bearish, but again, given the day today, I mean, the US CPIs, we need to kind of, I would say, keep our eyes on the downside scenario as well. So let's see how that's going to play out. Now, gold, jumping into gold, this one is just on fire, honestly. Like, look at this. I mean, just continues to rally, and I talked about this yesterday. I said that, hey, look at this. I mean, we did the 50% retracement on the Fibonacci. Yesterday morning, I was talking about this, and we were basically hanging below that 50-day EMA. Look, I said that if we do start breaking it, I'm going to aim for that 61.8. Well, talk about a good rally. It made a good move here. It traveled nicely to the upside, cleared the 61.8, and is continuing to push further north. I mean, the question here is how far can we travel here? Look, at this point, I will say although I am I'm with some of you who's trying to find maybe a move lower here, but unfortunately, I have to admit that this is just, like I said, if the dollar continues to weaken, I mean, gold could continue to rally, and depending on the situation, the financial situation right now, and the market situation, what's going to be happening with the banks, and so Yep, at the moment everybody's seeing they're seeing gold as a safe haven, as it is. Somehow, yeah, it's regaining its safe haven status. Yeah, it's just pushing further north and north. However, you need a little bit of positivity in the market, and gold might reverse, go for a bit of a retracement. But at this point, look, yesterday's high 19. Let's round it up here a little bit. 1915. That's what I need to see a break off in order to go further north. And by further north, I mean I'm talking about some of these levels right here. Well, 1917, not much actually, but again, good potential target. Previously acted as a good area of support resistance. Maybe this one instead, the 1919 level, or the 78.6% retracement on the Fibonacci. Now that doesn't happen very often, but hey, at the moment it could be the case. So that area, Fibonacci here. Let me just so okay. Okay. Anyway, so this is roughly around the 1926, 27 zone, so approximately around there. So keep that in mind, guys. But yeah, good potential target. Let's see how this is going to play out. But again, like I said, be very careful, cautious. If we somehow start pushing back below the 61.8, which is approximately around that 1900 zone, now that's where it's could become quite interesting, and we could see a nice decline here, maybe back to that 50-day 50% retracement of the Fibonacci, or even lower. So keep that in mind. Oil, yeah. So false breakout. There we go. I talked about this and I said that, hey, look, guys, I mean, we have this upside line, which is still in play, and so far it's doing a good job, and to be honest, it's still doing a good job now. However, the question is, can we see a rebound, or will we see another decline? So in general, look, I mean, we broke the upside line, and what I talked about previously, I said that, hey, I'm going to target that 72.25, which we managed to reach. Perfect. Good. Boom. One tick. Second is the psychological 70 level. Now, again, will we reach that? We need to see a nice, good, clear break below this upside line. So far, I'm just seeing a false breakout. Again, I don't like to kind of consider false breakouts as, a decent breakout. So, well, logical. But yeah, like I said, let's wait and see. At the moment, I will keep an eye on this upside line. If we drop again below it, I'll aim lower, but you need to kind of keep an eye on at the end of the day what's going to happen, because again, if we're going to get a second false breakout, then that's going to be it's going to raise some issues for me for the downside. Maybe we could see actually move back up. Bitcoin very quickly on fire. Honestly, yes, this is quite interesting. I mean, I talked about this yesterday. I said that, hey, if we stay above this 20, or we clear this and we stay above this 22,650, I will go higher. And well, so far so good. Great move here. Great move to the upside, and yes. At the moment right now, the next target is the 25,250 25,250 area, approximately around there. That's my next target. Of course, if we do clear that one, this will confirm a forthcoming higher high, and basically it opens up the door towards that psychological 30,000 mark. That's where my next target will be. But again, slowly, let's go slowly. Let's not rush into anything, guys. So let's see what's going to happen today with the dollar, because if that one strengthens somehow, yeah, we could see the cryptos dropping back to the downside. I can see in the chat room there, Hamid Salehi, XAUUSD, gold, basically. Yeah. So I mean, I've already picked up on that one. I don't know if you've watched it or not, but I don't know. Maybe there's a lag between here and TradingView or something like that. Maybe you already watched it, but if you didn't, I mean, then this video will get recorded, and you can quickly review that one there. But yeah, I'll have to, because I'm running out of time, and I'll have to kind of go further with this one, guys. So yeah, sorry for that if you missed the live one, but you can always review it on the recording. So yeah, I hope you like it. But thank you very much for the comment. Look, if you have anything, for example, if there is something that you don't see here in this list, let me know. I can pick it up either if I have time during the main session, or maybe I'll pick it up during the next session. Now, Ethereum, the similar story again. Bitcoin, look, yeah, I mean, there's not much to say. Again, it's a good, good move here. We had that fantastic move here back above all of the EMAs. We're currently near this key resistance barrier, the 1715 zone, approximately around there. Again, I think this has to be a little bit wider. Something like this. Let me just there we go. So yeah, let me mark the highest point, of February. So the 1742 zone. So in general, this territory right here is something that I'm watching, and yes, if we clear that, then we'll go higher. This will confirm our forthcoming higher high. The next target will be that psychological 1900 level, and or of course everybody will be watching that even more psychological 2000 zone. Jumping into a few pairs, guys. AUDNZD. So one of my favorite ones, honestly. Like, this one is very, very technical. It does most of the time do what I wanted to do. So hey, hence the favoritism. But yeah, look, I mean, I talked about this yesterday, and we dropped below the 1.0725. This confirmed the forthcoming lower low, and we're still trading below it. As long as we still trade below it, I'm gonna aim lower. And another thing that's helping me out here for the downside is the downside line, which is drawn from the high of the 21st of February. Now again, it's a little bit of maybe on the tentative side, but hey, you know, it's still a line, still a good one. So far, it's getting respected. My next target is the 1.0623. I'm gonna stick to that level if we continue to trade below the 1.0725. If we clear this downside line, my next targets are the EMAs here, and yeah, the 50, the 100, and the 200-day EMA. So these are the ones that I'm going to be targeting later on if we do break the downside line. NZDCHF, also something that I like to look at. Look, we had a bit of a roller coaster ride yesterday, and this is, I think, for some traders, it's a little bit annoying. And well, unfortunately, yeah, when you have markets like we have right now, then yeah, this is what you can sometimes expect in some pairs like this. And look, we stayed above the 0.5664. If we continue to trade above it, I'll aim to the upside. 0.5721 zone could be my next target. In a way, what we can do here is quickly draw a Fibonacci. You can see that we're currently near the 23.6, but if we clear it, we will go towards my next target, which I just mentioned. The 38.2 near the 0.5722 zone right here, or roughly around 0.5721, approximately around there, guys. So it's almost matching. But yeah, like I said, at the moment I am keeping an eye on this 23.6. It's currently, yes, providing a bit of resistance. If it continues to provide resistance, then this could be like that, where we could, you know, drop again to the downside, move lower, move to the current lowest point of March, and then we could, you know, go from there. But hey, let me just adjust this level. And by the way, look at how well this level worked out. I had it previously here, and actually, you know what? I'm gonna keep it. I'm gonna keep it because it worked out perfectly. We found support near the 0.5620 area, approximately around here. So if we drop below this again, this will confirm a forthcoming lower low, and my next target is the 0.5572. But again, as I said, I'm watching this 23.6. If we do push through it and push a little bit higher, my next target is the 38.2, which I mentioned before. I can see there in the chat room, MMH786, EURUSD. I have it on the list here. I'm going to pick up on that one in a bit. So, US dollar against the Japanese yen. Of course, yesterday we saw a decline in this one. logical. Why logical? Because again, everybody was jumping into the yen as a safe haven, so we have our safe havens, gold and yen, and sometimes the US dollar, but again, depending. Yeah, so we saw USDJPY declining, and we fell below the EMA. So this is something that I was talking about previously. I said that if we fall below this territory, all of the EMAs, this could open the door towards lower levels. Look, we drifted nicely below the 133.55 territory. I talked about this as well. We moved lower, and we found support actually nowhere, just around here, this 132.28, just randomly here, I think, or maybe not randomly. Let's double check my favorite Fibonacci. No, randomly, no. So yeah, this is the point where it didn't really work out well. But anyway, look, at the moment, I would say I am still leaning towards the downside. Again, I do understand the fact that today we have the CPIs. Maybe this could, ruin everything. But for me, to go higher, I would rather wait and see wait for a move above the 135.11 territory, approximately around here, or basically a push above all of the EMAs here on my daily chart. If I get that, and if I don't get a false breakout, just to get a normal strong move, that's where, yes, potentially more buyers could join in here. But at the moment, I'm cautiously bearish, and as long as we stay below the EMAs, then yes, I will continue targeting the downside. USDCAD, very quickly on that one. Look, again, I talked about this yesterday, last week. I talked about this, and I said that, hey guys, if we continue to trade above this upside support line taken from the low of the 14th of February, then yes, there is a chance for the bulls to step in somewhere. However, again, look how conveniently we traveled towards this upside line, basically to kind of confuse everybody, on what is going to do further. We got closer to these CPIs, and we got closer to this upside line. So hey, this is what the market does to you guys. So, if of course, maybe sometimes it's frustrating, but hey, at the same time, it's actually exciting. Let's see what's going to happen. So we'll see basically the CPIs should kind of give us an indication what it wants to do here with this upside line. Will we get a rebound, or will we get a nice drop here to the downside? Now, for now, I am kind of leaning a little bit more towards the downside, and again, just because I'm curious what's going to happen with the dollar. Yeah, if inflation comes out below the forecast, then basically we could see this one dropping a little bit to the downside. And again, US oil, the oil could go back up, and this could help strengthen the Canadian dollar. So basically, yes, we could see a nice move lower here. But again, a clear break here is needed. I need to see a push somewhere below. Actually, I'm going to mark this yesterday's low, 1.3705. And honestly, USD-CAD is one of those pairs that loves these nice, beautiful numbers, which are close to the 1.37, 38, 39, 36, 35. So keep that in mind if you're trading USD-CAD. So this is it does love those areas. So just kind of be wary of that. Now again, like I said, if we break the upside line, great, we could go lower. Again, false breakouts, don't forget about those. If we stay below the upside line, then yes, I'm going to be aiming for that 50-day EMA initially, and then maybe a little bit lower here. GBPUSD. So let's have a look. I think there's some data that came out. Let me just double check very quickly. Yeah, so we did get the UK average earnings, average hourly earnings, unemployment rate. So unemployment rate improved 3.7. Sorry, it didn't improve. It managed to beat expectation, because the forecast was the 3.8. It came out 3.7, but the previous one was 3.7. So we're not seeing really much activity here in GBPUSD. So it's in a way not really helping out the pound. So at the moment, yeah, it's just sitting here, and I think that GBPUSD is going to be just waiting for the CPIs, for the US CPIs, and then we could see some sort of move. So if you're trading that, again, probably don't be surprised if you're only going to see some sort of movement here, like later on today. GBPUSD, something that I like to look at. Look, let me just get rid of this. For now, it's working out interestingly because look, I mean, previously I talked about this and I said that if we pop above this barrier, the 1.8030, my next target is the 1.8276, approximately around here. That's the highest point of December of last year. We managed to clear that area, but at the same time, that area is providing very good resistance. So, of course, we can mark this little peak here, the current highest point of March, if I'm not mistaken. Is that correct? So this one's 83.20. Yes, so perfect. So that's the current highest point of March, the 1.8325, 26 area, approximately around here. If we clear it, then yes, we could go further north. But at the moment, look, this is a quite an important area of resistance. Again, don't be surprised if we, let's say, don't do much, movement, let's say, or we start bouncing around here a little bit, yeah, maybe the move could come later on, and let's see, like I said, let's see how this is going to play out. But in general, from the technical perspective, we are at a very interesting spot. So I can draw something like this as well. So we're above some of these short-term tentative upside support lines, this one right here and that one right there. So in a way, some of you might say, hey, maybe this isn't like a nice ascending triangle pattern. So again, according to all the TA rules, these tend to break to the upside. But will that be the case? Again, probably patience is gold, and yeah, we'll have to wait. But in general, I'm cautiously bullish because, again, looking at the picture here, it is off higher highs and higher lows. But again, a confirmation break is required, and not only a false breakout, but a normal break where the body of the daily candle stays above it. So keep that in mind. In terms of the downside, a break of this upside support line taken from the low of the 21st of February is required for me. But again, that's my kind of my style. I need to see a drop below it in order to start aiming for some of these EMAs, or maybe even this other upside support line. But again, let's wait and see. And finally, EURUSD, guys. So this one is a mess again. Look, I talked about this one a lot, and in general, I think that I want to get rid of some of the levels here. And actually, you know what? Let's start fresh. First of all, let's look at from the perspective that we're trading currently above all of the EMAs. We're currently seeing a bit of a correction to the downside, but that's okay. That's healthy. If we stay somehow above the 50-day EMA today, which is shown here as the red line on my chart, if we stay above it, I will consider maybe something like this, where we could see a nice push back to the upside. To the upside, I mean targeting some of the areas around here, the 1.08 zone. In general, that's the zone, so it might be maybe a little bit lower, but a little bit higher, but approximately around here, that's going to be my next target. So let me just put an arrow like that, and yeah. But if we start falling below the 50-day EMA and we stay below it, then yes, I'm going to aim for that 100-day EMA, because so far, I mean, look, these EMAs are doing their job. Yes, we're oscillating around them, but so far they're doing the job. So again, they're acting both as support, resistance, then if we do start clearing the 100-day EMA, my next target, of course, will be the 200-day EMA and also some of the area around here. Well, to be honest, probably it could end up testing this area, because again, we have the 200-day EMA around here, and that area is between the 1.0525 and the 1.0536. These are the lows, as you can see here. The lowest one level is of course the current lowest point of March. Now, if that gets cleared, now this is where the excitement starts for the bears. I mean, honestly, this could open the door to its much lower levels. We could even start considering areas like here, or even here, the 1.0290, 1.0222. But again, you need a clear drop below this, and at the moment we are above all of the EMAs, and which could be seen as a bullish indication. The only hope that the bears can have right now is that, let's say, the CPIs come out, much higher. So, and then maybe, you could see that nice decline here to the downside. But at this point, look, I am cautiously bullish on this one as long as it stays above the 50-day, above all of the EMAs here. I'm going to be aiming to the upside. 1.08 territory could be a nice target. Again, this is not the perfect I think scenario here, or idea here is to draw Fibonacci, but just roughly. Look, we did the 38.2, so maybe the 50% retracement could be a nice one, or maybe even the 61.8. But again, like I said, at this point, this is the moment where my favorite Fibonacci doesn't really work, and it's a little bit in the way. So I'd rather just stick to some EMAs and some of the levels. If you're not comfortable with this scenario, what you can do here is to keep an eye on yesterday's high, 1.0748.49. Clients could clear break above it, would confirm a forthcoming higher high, and then yes, we could aim for that 1.08 territory. I do understand, maybe not the most exciting, move here, but hey. If you're a day trader, then 50 points could be a nice good target. But again, look, also you need to always consider these things. Look, whenever we have a break, it doesn't mean that hey, straight away it's gonna go higher or lower. No, it might have a break, it might go up a little bit, go back down, because at that point you're probably putting your stop loss, which is correct, to be honest, and then it might take you out again and then reverse back up. Then we can see, like, in a way, at the end of the day, the chart kind of moving in your direction, but it kind of took you out, and but unfortunately, guys, that's the game. So unfortunately, you have to position yourself. The most important, doesn't matter if it takes you out, the most important, always remember that because you put the stop loss, and let's say it could go easily against you very quickly, so at least you have managed to protect your account. So like I said, just be careful, do what you're comfortable with. You can listen to every analyst out there, guys, you can listen to everybody else, but at the end of the day, you need to do something what you're comfortable with. The most important is to protect your account, have your stop loss in place, and then everything will be fine in that case. Look, I can see that in the chat room there, Hamid Salehi, can you add DXY? DXY is here. This is our Easy Markets DXY, US dollar index. So you can also review that one when the video is finished. I mean, when you can watch the review. But yeah, I always pick up on DXY. This is one of my one of the main ones that I'm watching, and then followed by gold, the one that you requested as well. So yeah, have a look at those. And MMH786, Euro GBP. Okay, yeah, I'll pick up on that one in my tomorrow's session. That's fine. That's absolutely fine. And yeah, we can go from there, guys. So thank you very much, guys. Thank you for watching. Thank you for attending. Thank you for sitting, till the end, if you did that. But I really appreciate your time, guys. Your views, your likes, your comments, everything. I really appreciate that. So thank you very much for that. If you want to catch me tomorrow morning, as always, 7 o'clock GMT time. I think in 2 weeks we're gonna go to 6 o'clock GMT time because of the time change. But hey, we'll talk about that later. But in the meantime, guys, happy trading. Stay safe. Have your stop losses in place, and everything will be fine. So thank you very much, and bye bye.